So thank you for coming today. We are going to be talking about, again, I'll talk a little bit about this is Intuit Firm of the Future webinar, and we are covering business operations for accounting firms today. Brought to you by Intuit, and also I'm from Carbon, so I'll talk a little bit about that. But this is part of the Firm of the Future webinar series. Check out www.firmofthefuture.com to not only see this webinar, but many of the other ones that I've given beforehand, constantly updating and providing more content day in and day out. So definitely a good resource to go to. For those of you that are QuickBooks Pro Advisors, those of you looking to be a Pro Advisors, some might be advanced. You know, if you go to QuickBooksTrainingEvents.com, Intuit has put up a lot of not only live trainings, but virtual trainings as well. So if you're just starting out, you can go to one of the Firm of the Future events. I'm actually currently here in New York. We're doing one tomorrow in lovely Manhattan. But you can go to fundamentals training as well. If you're new to QuickBooks Online and need to get an understanding of exactly the ins and outs of QuickBooks Online, that can lead you to become certified. So, and then ultimately being advanced certified overall. So if you want to find a training event that's right for you, possibly local or virtual, go to qbtrainingevents.com. Before we get started, some tips and tricks and some details. First thing is, before we go on the slides, for those of you looking for CPE credit, there is one CPE credit up for grabs today. There will be a slide that I present later on in the presentation with a keyword in it. You must capture the keyword, and I will give a poll at the end of the webinar today for you to submit that to get your one CPE credit. So note, there will be a keyword somewhere during today's presentation, and there'll be a poll at the end for you to submit that. For those of you new to GoToMeeting or GoToWebinar, there's a big orange button up there to expand and collapse the control panel, close any apps like maybe Skype or the like that might take away your bandwidth. Otherwise, you might lose the audio. And then we will discuss questions as we go. I've got close friend, colleague, ex-Intuit employee too, Andy Anchetta. She is on the questions area as well. So if you got a question, she'll try to answer them there. I will also pop in and try to answer the questions as we go. So with that being said, who am I? My name is Ian Vason. I'm a co-founder and the vice president of product marketing for Carbon. My email is down there if you've got any questions about today's content or things in general. A little bit of history. I've been working within the accounting industry and amongst the profession for the last 15 plus years, in tech for 25 plus years. I used to work at Intuit beforehand for almost 10 years, I used to lead the QuickBooks Pro Advisor program and other product lines all related to QuickBooks. For those of you not familiar with Carbon and the like, one of the things we try to do is we meet with a lot of your peers and colleagues, maybe some of you in the audience, and we've actually brought a lot of that together into Carbon editions. You can check out carbonhq.com editions. The one that's for this quarter coming up is about how to double your firm, practice growth. It actually is not available this week. It's actually available today. So it just got launched today. So if you like today's content and you want to get a little bit more of a deep dive on practice growth, you can check it out. As well as we've been asked a lot about helping people in order to get to that next level of growth, and you can check it out. If you want to get a scorecard and get some tips and tricks, go to carbonhq.com/scorecard. And then again, if you're not familiar with Carbon overall, you can check us out at carbonhq.com. We are the practice growth engine for accountants, and that's what the product looks like. But we're not going to talk about Carbon today. What we are going to talk about are business operations for accounting firms. And so I've taken this talk. There's actually quite a bit of content that we're going to cover today, so buckle your seatbelts. We've got quite a bit to go through. And I wanted to kick it off again. Every good presentation, may or may not have one good quote. I pulled this quote that we actually had used in the recent edition. I think it actually is it's good for what we're talking about today. And one of the biggest struggles and one of the biggest pain points today faced by everybody in North America, for instance, the number one barrier is around hiring, talent management, and so forth. And one of the things that this quote brings up is that your business strategy and your business organization needs to figure out, what is your key goal and your way to separate yourself from the competition. It needs to emulate that. And so Keith's quote here he's from BKE. was that they, for them, their latest hires have all been from startup companies, and that's because they want to get from an old way of doing things to a more modern, scaled services business, and they want to have a really scrappy and innovative approach to do that. And so his business strategy and ultimately his business operations is impacted by his approach to be more innovative in market. And so we're not going to go on as much of business strategy conversation today, but there's really three lenses you can go on there. You can either be the most innovative firm, you can have the best customer service, or you can be the cost leader. And so again, any of those business strategy focuses that you may have and the way that you want to approach it is going to impact your organization, your business organization overall. So with that being said, for business operations, what are we going to talk about today? And I broke it down into 5 sections. And for those of you that may have been on a webinar with me a couple weeks ago, where we talked about how to have an effective sales process, we talked a little bit about measures of success. I'm going to bring it back up today because you need to know where you're starting from and where you're ending, where you're ending up, and all the different initiatives along the way. And when you're talking about operations overall, your measures are super important because it's about effectiveness, efficiency, and all those things, and it needs to be properly measured. The second one then goes on higher level firm management strategies, because those strategies ultimately are going to transform the culture. They're going to lead to better ways of functioning all across the entire organization. So your strategies at the top level will ultimately lead to the best outcomes as you go forward. Then we're going to talk a little bit about organizational design theory, because it's going to have implications on how you might structure and how you might approach the problem overall. That's going to lead to, I want to talk a little bit about some role definitions and specifically around some dedicated functions that we see, those firms that are operating at what I see as above normal capabilities, what have they done that's a bit different than the norm? And so we're going to look at that. And then lastly, we're going to look at some strategies for operational excellence. And so I've got, I think it's about 7 tips there. Again, trying to be able to give you some insight on what others are doing and how that ultimately leads to good value and ultimately the best, the most efficient firm you can. So with that being said, let's jump into the first section here. And again, I'm going to go over this relatively quickly today because we have talked about it in a previous webinar before. But to bring in the business strategy guru, Peter Drucker. Those of you who don't know him, pretty famous if you've actually gone to business school or taken any business courses. Generally, you'll read a book by him or you'll study some of his concepts. If you can't measure it, you can't improve it. And so that translates across all factors and all functions in the business. And again, we're about being able to ultimately provide high value to clients and ultimately drive revenue and profits for the business. And ultimately, you need to make sure that every lever, whether it be on a sales marketing side or let's say it's in services, all are adding value and ultimately driving towards the goals that we want. And so I put up some key questions here. And I think the change here is going from a mindset of, the once a year type business and tax work and looking at just, ultimately profitability numbers and doing it more of how a tech company might look at and what we nicknamed as accounting as a service. Again, we're moving towards more advisory services, more ongoing subscription capabilities with bookkeeping, payroll, and accounting work. And so you need to be thinking about how you're looking at your business on an ongoing fashion and how each one of those services is accretive and each customer or client is accretive to the overall businesses. So I put up some key questions to think about. And it's really thinking about it more granularly, like month-over-month growth, or what is really the net worth, and what's the productivity of the employee. And one of the key concepts here in terms of thinking about subscription-based businesses is this concept of the magic number. And what is that? So I put up an example of what it is here, and it's essentially looking at the revenue increase over a prior quarter, multiplying that out for a year, and then dividing it by the sales and marketing expense in the previous quarter. And so it's taking a look and understanding, the efficiency of your sales and understanding, its payback and how that's going to impact the business overall. Again, I've talked about this at length at the previous webinar, which again, you can go to firmofthefuture.com against the effective sales webinar. And ultimately, that's going to translate to the different measurements for managing the firm. On the first part, the overall business metrics, many of you are tracking this already, but you may not be tracking lifetime value. You may not be tracking cost of cancellation or month-over-month growth. Again, those are other metrics that you need to be incorporating in to see how things are translating over time. Some ratios up here. We talked about magic number. The quick ratio. Those are not new things to you, but I think where you really want to start spending in terms of also business operations is, the efficiency tasks and works insights. What's the productivity of a particular staff member? What is their contribution ultimately into the revenue? When you take a look at your clients, your best and worst over against the median, understanding where that best value is coming from, where your risk lies. And again, those are a bit unique, but again, you need to be having that sort of understanding of the efficiency and productivity of the firm and the individuals in it. Lastly, and again, this was what we had talked about before, was really sales measures and really understanding your marketing funnel leading to your sales funnel, which ultimately leads to the service work and the ongoing subscription revenue overall. And so again, the ways to measure that are closure rates, ops, and opportunity to close. So I just wanted to have a quick refresher on what are the measurements overall, just to make sure that when you're going into thinking about this particular topic overall, that you are indeed looking at it the 10,000-foot view and then bringing it down and measuring it over time. So that brings us to the second step, which I want to talk about a little bit more in depth. And that's really the firm management strategies overall. And the questions here around this are, again, do you have a business plan? Do you have a succession plan? What's your 1-year plan, 3-year plan? Are you taking time to step back from your business once a quarter and think about where you're going to end up towards the year? Are you taking a step back once every 6 months and thinking where you're going to be in 3 years? Over the last year, I've talked to several thousand firm owners and practitioners. And time again, we're all caught in the weeds of trying to get all the work that needs to be done because there's just so much on everybody's plate. But we're not taking the time to take a step back to understand where we're headed and then putting in the different pieces in place to make it happen. So please do that. Again, it's about what we call horizon planning, understanding your short-term goals, which are this month or this quarter, medium, which is during this year, and then long-term is beyond that. And again, then it's driving those objectives from each one of the organizations. Just like when you're coaching your small businesses, it's understanding what ultimate goal we're driving towards, and then breaking it down by the various different departments. And then it's alignment across that with your employees and so forth. So what I'm going to do is we're going to talk about 5 concepts here about how you can put that into place and be able to make sure from an operations perspective that everyone's beating to the same rhythm of the same drum, for lack of better words. So the first one actually, this is actually a concept from Intuit. Something that I worked through when I was there for almost a decade. It's a concept called Big Why and True North. And it's a very simple concept. For the firm overall, there should be a set of objectives. It may be 3, it may be less, of what overall was everybody in the firm driving towards. And these are the objectives of the partner or the CEO, whoever the leading person is or persons. What are they driving to overall? And then it's ensuring that everybody underneath that reporting structure is aligned to those particular set of very narrowly defined goals. And that ensures that people are working on the right thing. And so the big why is, why are we doing this? What are we trying to accomplish? And that true north is everybody that's in the organization pointing to the key priorities that are driving the firm overall. And so there should be nobody working on something that isn't directly aligned to that. And if they are, they should stop doing it. Concept number 2. This is a concept from John Doerr. This is used at places like Google and Facebook and a bunch of these big tech companies, but also companies across all sorts of industries. And it's another pretty simple concept, but it's about having key objectives and making sure that they're measurable overall. So it's an extension of number 1. And so the best practices is that you yourself and your staff should all have somewhere around no more than 5 objectives, but preferably maybe 3 objectives that you're going to accomplish between now and the quarter that's going to close. And so at the beginning of the quarter, you're going to state what your objectives are. They better line up to what that big why is. And then ultimately creating very measurable results about how to be able to define whether or not there's success or not. And you score that from a 0 to 1 in terms of fractions, and then you can see how you end at the end of the quarter, and then you build the objectives for the next quarter. But what this does is it ensures that people aren't making goals that are 1 year out that are completely erroneous. And it's making sure that they're always measurable, so that way you can clearly understand, what it is that we're trying to obtain and whether or not we did obtain it. And so this concept of OKRs is very good in terms of when you're managing a firm and the operations, ensuring that everybody has clear line of sight to what they need to accomplish over what is, over the time period by which they can actually influence it. And that is by best practice, a quarter, 3-month lookout. The third concept is the directly responsible individual, the DRI. This is actually pulled from Apple. And this is also a pretty simple concept, but really important, especially when you're in a team setting and there's a lot of work that's being collaborated on to complete. And again, for many of you out there, you're working with clients and you may have work that's payroll, bookkeeping, accounting, and advisory related, and that may have multiple people touching it at any given time. So the directly responsible individual is that one person that ensures that the work's going to get done. So every task, every checklist item, every process or checklist overall, every client, every project, all have one person that owns it. So it's one ownership for everything that might go on. Now that ownership can change from task to task. It can change from client to client, but there should always be, for lack of better words, one throat to choke to ensure that the work is getting done on time, on quality, and at the expectations of both the firm and for the client. And so that ensures that there's no finger pointing and that things go out when they're supposed to. The fourth one is another concept that Intuit's used quite successfully, and other companies use it as well, but this is for projects. And again, most of the work we do is project related, and it's ensuring that everybody knows their role in the equation. And again, we're talking about business operations. It's very good to understand from a project by project basis, each person knows what they're going to contribute, how they're going to be a part of it. And so there's 2 models. There's one called the Rasky, and there's another one called the Daisy. They're roughly the same, so I'm picking the Daisy one here. That means that every project has a driver, one person that's going to ensure that it's going to get done. This would be the directly responsible individual that we just talked about. There's one approver for everything. There's not 2 approvers. If you've got 3 partners in a firm, it's not 3 partners. It's one partner who's approving the particular details of a given project. There are people who assist in the work, who actually are getting their hands dirty. Those are contributors. They're not driving the project, but they're helping the driver to complete it and are called on to help. And then there's people who are informed. They are not contributing to the work. They just need to know it's getting done and what the status is, so that it may influence the work that they're doing. But they don't have a say in the project, and unless they're promoted up to a contributor, they ultimately are not going to be able to inform or change the project on how it's being done. And the last concept here is operating mechanisms. And so the top 4 pieces here are really around how to manage the firm, make people know what their roles are. The operating mechanisms are the overlay to ensure as the work is being done, that's being done in the way and the manner, and that surprises are not popping up too late in the process, and that we don't have the surprises, and we ensure that we get things done on quality and on time. And so the way this breaks down is that the folks that do this really well, everybody in the firm, no matter if you're the partner all the way down to the person that's doing certain tasks, you are reporting out what are the 3 to 5 things you're going to accomplish each day. And that's broadcasting it out there because it then provides the fact that you're taking ownership of what you need to do and responsibility, and you're prioritizing the work day in and day out. Every week, it's reporting out what you've done, but then forecasting what you're going to do the next week. And so this is how you're able to start to see whether or not we're meeting the objectives for the projects overall. And then monthly, it's more tops down than bottoms up, which is reporting out how the projects are progressing to their ultimate goals, how we're going to end up towards the quarter. And the quarterly is to look at the business overall. Are we meeting the revenue goals? Are we meeting the project fluidity that we're supposed to have? And that's really a report out from the partners to the rest of the organization. And so I bring up these 5 different pieces. They're very good tools on how to manage the business operations overall, and it sets the right tone. It provides the right visibility. It creates the transparency that's needed so that everyone can work together to make sure they're accomplishing the key priorities that are going to drive the business to the goals that are identified. So I know that's a bit much, but it's really critical in order to have a really efficient and well-oiled machine in terms of your organization overall. So with that being said, just take a look, see if there's any questions popped up. Okay, let's talk about organizational design theory. What are the things that are unique about practices today and the environment that we're in that ultimately lead to the uniqueness of an accounting firm versus a standard small business or other types of organization structures? So a couple things that influence organization design in terms of from one firm to another in the accounting realm is, what are the services that you offer? If you're offering the full accounting suite, you're doing payroll, accounting, tax, advisory, you're doing audit, IT consulting, the more services that you offer, the more or the larger the organization has to be. Because while you could have yourself who could do all of those things, certain pieces of the service stack are more profitable than others. And again, there is as the clients are going to increase, the amount of services will narrow if the organization size isn't increasing as well. So we see this time and time again. The second one, again, is that factor of number of employees. The more employees you have, the more services you can offer, the more specialized you can have certain resources be, while you have a more general pool that can be, they can do more departmental functions. And we're going to see that in a second. And then the knowledge is the last component. Knowledge of the employees allow for them to be more generalistic across the services. Again, you could have one person who's quite knowledgeable that you pay significant amount of money, but they could be doing audit, they could be doing advisory, maybe not together with the same client, but they're able to cross over in different services overall. And so that leads to this particular diagram. In a given, no matter what type of firm you are, whether you're accounting centric or bookkeeping centric, audit or whatnot, these are the 7 major categories of service offerings that you can provide with a definition of all the different underlying pieces of services that you can do. This is actually a good diagram for those out there that are trying to define what your bundles might be when you're presenting to clients. But the reason for showing this is you're choosing from this set of 7 major services. Financial wealth management is another one, but I'm focusing purely on enablement of small businesses overall. Now those firms, while they may be offering those 7 services to client, the average firm size is roughly 3. And so for those of you out there that are by yourself, you're part of the long tail of smaller firms, and there's some really massive firms as well, but the average firm size is 3. And ultimately, firms have 2 paths. They can either be specialist firms, where they're focusing just, they get a majority of their revenue on audit or on payroll, or they're doing virtual CFO services, or they're going to be more general. And again, that's where you get the definition of an accounting firm, where you're offering a whole set of services and not one of them is more dominant than the other. And again, the size of those firms are dictated by how much of the services they can offer. And again, that's why you see sort of a sizing out there as well. So you could probably figure out, in the chart, kind of where you're at based on what you're doing. Now, how this impacts organizational design is there's a factor of 1 to 6. When you have 6 people working on a project together, you then get to a point of communication and collaboration problems. And that's where you're going to have a manager within the mix. And so that sweet spot is 1 to 6, maybe up to 8 employees, where again, that's going to require some oversight and some management overall. We do see, however, some really, really efficient firms out there, and they're able to balloon that up to 15 employees to 1 manager. But again, that's because they have really tight processes and coordination. Now, in a firm, it then goes to those who do the work. There's managers because of that 1-to-6 ratio, and then there's partners that sit above that. And so again, you start to see this sort of hierarchical structure. And so when we talk about business operations, you have to take that into account because the size of the firm is going to dictate sort of that hierarchy being built out. Now, what's interesting is even with that being said, there are really two different distinct types of accounting firms out there overall. There are those that are vertically oriented and those that are horizontal. And then there's obviously some hybrid in between that. But this is how those firms look overall. And again, you may or may not have done an active choice into being one of these two, but it's understanding, why they exist and the limitations of them that ultimately, in terms of understanding how your business operations are going to be impacted. And so if you're a vertically created firm or oriented firm, you have essentially a pool of specialists that can do anything for any client. And so what happens is, as the partner, you may have a client that you ultimately sign up. You then are going to hand that client to one person who's going to be doing the accounting, the advisory work, the bookkeeping, for instance. And you may have another client that comes in that needs tax services, and you may expand that to accounting over time. But that one person can handle all the needs for that particular client, and requires a really knowledgeable specialist or accounting expert, or depending on which service is being offered, it might require a CPA that has a whole rounded skill set, but you need a pool of those to be able to dish them out. As companies get larger and larger, and we generally see this with firms that increase over a size of 12, they then ultimately start to focus and narrow what the actual groups of employees are doing. And this is where it becomes departmentalized. You'll have an accounting department, you'll have a payroll department, you'll have a tax department, you'll have a bookkeeping department. And that then allows you to have younger talent. It's all about efficiency and driving the work through those different departments as fast as possible. And then it becomes this more complicated coordination effort as the work has to move between group to group to group. And you then start to see things like account managers ultimately be driven in order to make sure the work is done and there's one person that's interfacing to the client. So again, understanding kind of where you're at and where you want to go to has implications on your hiring, on your retention strategies, and ultimately how you're going to motivate and get work done overall. Now, we've gone through a lot of the background information, kind of teeing up the conversation that we're going to have for the second half. So it's a great time for us to take a moment and have your CPE keyword today. And that keyword is chimpanzee. So for those of you looking for CPE credit today, you've got to capture this word chimpanzee down. So when I give a poll later, you can put in chimpanzee and ultimately get your CPE credits. All right, so last thing, we'll move on, is your CPE keyword today is chimpanzee. So we've now talked about the fact that the organization designs that exist. We've talked about measuring it over time. We've talked about how to ultimately manage the firm at a top level. How does that translate into the roles that people are going to play, and ultimately some different functions or dedicated roles that we're going to need to have based on our strategy going forward. So I pull up this quote from Kenji from Acuity, who, by the way, I think does an amazing job in terms of their sales organization, really innovating about what they're doing and how they're doing it. So it's a really good test case. And again, their decision was they didn't want to run it like a business, but they wanted to run it instead like a rapid growth business. And for them, they had to go from a generalist pool to a pool of becoming a company of specialists. And so they have this pool of accounting professionals, but they want to make sure that they had roles that were assigned. And again, this is essentially that departmentalization, but of higher skilled folks within that in order to scale and have higher quality and higher and lower risk, better repeatability, and be able to do that at a high volume at a much rapid pace. So again, they've been living and breathing this overall. So that goes back to the structure that we talked about. In terms of just having, for Kenji, in terms of he hit a wall when he had his pool of accounting professionals that he was able to just throw the work at, he now decided that he was going to invest his employees, make them more focused, be able to do a smaller set of the work, which might have been accounting, payroll, or tax. I'm using this as an example, but to allow for their efficiency, to allow for more work to be driven through the organization overall. And that provided the capability to have things done at a higher quality, less lead time, faster, better throughput, which ultimately allowed for more profitability off the work that was already being done, but then more work and capacity in the system to be able to bring up the capabilities and the capacity for more top-line revenue. And that leads to what are some of the unique roles that we're seeing that are being driven in organizations today, and how that's changing a bit of what the traditional model was. And now some of these might not be unique to the way you're operating. Again, it may be. And so there may be ones that you already have, there may be ones that you want to consider new. The first one here is really having a true CEO, and they're really the visionary. They're really the one that's able to implement the plan, be able to negotiate. Again, you may have a situation where you have multiple partners in the organization, but it's always going to be easier and more efficient by having one leader that ultimately is able to make sure everyone's aligned and working towards the collective goals that were set. Again, referencing back to those firm management strategies. Now, the second one to me is one of the most important ones. And I get the fact that when you're a smaller organization, it's hard to put this in. And so a lot of firms, what they'll do is someone will step up into this position, even though it's not necessarily in their title, but it's an operations manager. The quickest way to get more value out of what you're doing, it's not, and again, to be able to grow the company overall in terms of revenue and profits, it's not about going out and getting more clients. It's about doing the work that you have today more efficiently. And I can't stress enough about going and doing business process improvement and getting that continuous improvement mindset driven into the organization. Because if you look at the processes and you figure out how to do what you're doing today, just that little bit more, a little bit quicker, that translates across all of your clients. It allows for you to free up capacity, and that capacity can be used in so many different ways. That can be allowing you to do other service lines, maybe bring in advisory work. It may allow you to get more clients. But again, there is so much opportunity that sits in organizations that I see day in and day out to be able to do what they do just that much faster. And it really is about taking a step back and taking the time to analyze those processes overall. If you're interested on the steps to process improvement, go check out firmofthefuture.com. I've done a talk up there about about process improvement overall, and it gives you the 10 steps to do it. Now, the next one is business development manager. And I put this up here because I wanted one bullet, but generally that's what people are calling it in terms of someone who's going to ultimately drive more clients to the organization. Now, typically this is somebody that's being contracted in, or it could be a full-time person that's generally focused on the marketing side. I view this as you generally want to have a marketer and you generally want to have a salesperson. They are different skill sets and they provide different capabilities overall. But you need to be having somebody focusing on that sales and marketing funnel overall, whether that be, again, sometimes it's the partner that's focusing on it. Sometimes you bring in a contractor, but you need somebody to make it so that you're leveraging your referrals, your referral marketing, and putting that in place. Somebody that's helping you and guiding you to ultimately help you narrow your focus on a marketing perspective so that you can have a really well-tuned message, proper website, and so forth. And you need somebody that's able to drive the sales funnel to ultimately ensure that you're bringing in more clients, you're replacing the ones that you're losing, you're increasing the cross-sell and the upsell across the organization. And so you always have to be out there farming, cultivating new opportunities and new clients into the mix if you want to be growing the firm. Otherwise, you're slowly in decline. Next one is a service delivery expert. And this is an extension of what we talked about before in terms of the vertical and horizontal firms. And again, it's once you've got a more focused target that you're going after, you figured out what niche you're going to be in, then it's getting the experts that are going to be able to drive higher willingness to pay from clients in order to get their particular verticalized or the specialty that you're focused on, being able to have the knowledge and the expertise to be able to charge more and to be able to do and perform better work, because that output's going to lead to more referrals, which is going to be leading to a higher willingness to pay, which then brings in more value. The fifth one here, which is something that's quite unique, we saw that firms that are able to do onboarding consistently less than 30 days had lower loss of new clients during that process of onboarding, had a dedicated onboarding specialist that focused strictly on ensuring that clients who came through the front door in sales ultimately got into the back door or got through the process to be serviced on a monthly basis on the back end. And that's because somebody was dedicated to make sure that they're constantly prodding to get the next piece of information or a decision that needed to be made in order to continue to move that project along so that it becomes routine work on the back end. And so if you are by yourself and you don't have the ability to have a dedicated onboard specialist, you should dedicate time on your calendar every week to ensure that you're focusing on moving those clients from as an opportunity into the work that you've promised to do. And the last one's an IT specialist. And this can have in different embodiments, but there is a sea of applications for you to discover. You can go to Accountex and see this chart that they have of well over 500 applications to choose from. And if you are uncomfortable with testing out technology, or again, you're strapped with doing things that are more strategic or tactical in the business, go hire an intern that can live and breathe in this. There's usually somebody in the firm that's a tech specialist or someone who's always looking for ways to do things in faster and better ways. Empower them to be that IT specialist, the person who can kick the tires on new products and be able to be on top of the trends and the changes so that you're not the last to adopt, may not want to be the first to adopt either, but that you're understanding where you can use technology to better increase your efficiencies overall. And again, your processes are first, but your technology should be part of that discussion as well. So those are the different roles that we see being formed in those firms that, again, are a little bit more progressive, but are doing really, really well out there. The last bit I wanted to bring up here is this concept of what I call the 5 S's. And again, it's thinking it from a client perspective on their experience or their journey as they work with you over time. The first is really the selling side of the equation. How did they learn about you? What was the process to be sold, to sign, to move forward? Then it was that onboarding, that setup phase about being able to learn the systems, the technology, being able to exchange the necessary information so you can get them up and running, and then being able to move the work into something that's more ongoing. Then it's the thing that we all know and do and love and that we're very comfortable with, that's serving them, getting those projects done. But on the back side of that, it's about supporting them day in and day out, because that support's also a training opportunity. It's also where you're ultimately understanding their changing needs and being able to advise them overall. So that then translates back into sell. So you may have sold them as a new client, but then you've got to be able to do all the cross-sell and the upsell. And so when thinking of it this way, this is where you want to focus on understanding what parts of this equation are the most important to you. So even rank them as maybe serve is the most important, and maybe sell is the second important. And then looking at, should I have, what are the functions that I'm going to need in order to enable that to exist? So again, if sell is the most important, the first part of that, then you're looking at a dedicated sales and marketing function in order to drive clients in the front door. If it's sell on the other side, on the back end of that, then it's about cross-training those who are actually doing the work or having account managers that follow up in order to use the information you use to be able to complete projects, deliver them for clients, and ultimately drive that into referrals or be able to upsell clients into, let's say advisory services on the backs of doing bookkeeping work. And so again, this is the process and the experiences that your clients go through in understanding which ones and in what priority those are most important so that you can take your organization and focus it and be able to understand what's going to be important to drive and do that sort of order of operations to build up the organization, the capability. So that leads to step 5, which is some strategies for operational success from what we've seen out there from folks that have really, really, I would say, progressive but effective organizations. One of them goes back to that vertical and horizontal oriented organizations. And if you're taking those organizations and you want to be able to ultimately optimize them further, is that organization going to get more focused, more narrow, more specialized? Or are you going to drive a more hierarchical structure in departments whereby you need to be able to simplify the work, simplify the tasks, have really fine-tuned processes so that you can lower the costs of the employee pool and the headcount, that you can be able to more systematically get that work done and be able to have maybe lower skilled work doing the accounting or the bookkeeping and so forth. Because again, you're trying to be like Keith Mueller, which is I'm trying to drive a really efficient organization overall. The second one, which is what we've covered with a little bit earlier on step 4, was you advise small businesses day in and day out, but you need to run your accounting practice just like a small business. And that means you need to know what your firm does really well, and you focus and hone in on that. And then you need to know what sort of functions that need to be brought in. Again, you should have a sales and marketing function. You should have a support function. You should have those that are doing the service work. Maybe it's onboarding, there's a part of it, but you need to have dedicated resources ensuring that all the key capabilities in the firm are being done correctly so that you're able to accelerate and perform just like a regular business would, like a small business that you advise. Third one's a big situation here in terms of the biggest barrier in market today is all about talent. It is really hard to find new talent. And with that being said, you need to spend the time and the energy to make sure you retain your good talent as well. And we see this in smaller firms. There's a pretty big holdup situation. You may have someone who's doing all of your advisory work. You may have, in terms of you're doing tax, you may have one CPA that has all the answers to the key questions that are being asked. And if that person leaves you, you're in a lot of trouble, because it's not only did you lose the capability, but it is going to take you months upon months to find the replacement. And so one of the key actions here is try to cross-train your key roles and your staff so that you're not in a situation where if somebody leaves, you're completely in hot water with your clients. And so that helps you avoid the holdup problem. Interestingly enough, when you cross-train people, it actually motivates them, because they're able to obtain a wider set of skills, which makes them more marketable. It also is more enriching for the job. And so again, cross-training is a really good way to ultimately help motivate employees as well. And so it's a win-win for both sides. So again, don't underestimate the value of cross-training. The third one is what I call retool as you evolve. And this goes to the concept of process improvement. And what we see is that when firms go ahead and they make certain step function jumps, maybe they're implementing new technologies to modernize the firm, or they change their processes and they innovate on them to ultimately do things in a different way that provide a step change in the amount of time it takes to complete. That's hard for a lot of staff. People are, they want to stay, something that's comfortable. Change is sometimes hard for a group of people, and typically as you're retooling, it's not going to be right for everybody in the firm. And so you will ultimately lose some of your staff, maybe because they want to leave, it may be because you've also got to push them out. And so you have to be cognizant of the fact that as you're retooling, you're going to lose some staff, but it's an opportunity to be able to find the right people for the right roles. And it's also helpful for those people who it's not right for them to be able to go to someplace where they feel more comfortable. And so just note that when you go through this modernization and you're making these changes to your business operations, you're going to see it's going to go in these bits of cycles of improvements. And that can happen from all sorts of changes that I list here on different phases. And so again, be cognizant of the fact that that's going to have ripple effects within the operations overall. Okay, the next one here is really around structure. The structure that you pick and how you're driving the firm overall in terms of your firm management strategies is going to impact your production planning. And what I mean by that, and again, I've given other talks that, again, you can find on firminthefuture.com around capacity planning and production planning, but There's two different types of work that can be done. You can shove work in. So again, you may be a tax business, and everybody that walks in your front door that wants a 1040 completed, you take that and you shove it into the queue, and you just keep pushing it, and it's this waterfall that ultimately, again, it's when however much time you have on resources, the work will come out the other end based on when it entered, how big the queue is, and then how long it takes to get out. The other concept is pool planning, which is you have a bunch of work that's queued up. You don't bring it into the process until it's ready to be worked on, and then it comes out the other side, and it's more predictable. And that's more of a Kanban style or just-in-time sort of manufacturing. But your structure will impact that and also impact your forecasting of how you do work. So just be cognizant of that. Next one's really around incentives. And I talked about this a lot in the sales conversation, but you need to be really deliberate on your incentives. Everyone is trying to maximize their value in the equation. And it's not bad. It's just people want to ultimately be able to get most out of as much as they can out of the relationship. So you need to be thoughtful in terms of how you're structuring people's compensation and their incentive structure. And so if you don't think that through really clearly, you can incentivize really bad behavior. And it's not coming from a bad place, but it's, again, people are just trying to maximize the value. So we recommend, for instance, if you're hiring a salesperson, you should have 70% of their salary on like a base salary. It's fixed. And then 30% variable, with half of that 30% being on opportunities that they open that are qualified, and then the other half of that 30% on the deals that they close. And so you're incentivizing them to work hard, to bring in good quality opportunities, and then close them as much as they can, because it's ultimately that whole package that comes together. Again, you may, if you want to drive a culture of high-end customer service, then you want to be focusing on how quickly you're able to answer questions from clients as they come up, and how interactive you are with that. And so you may want to think of the incentives that's going to drive that behavior of always being available at a moment's notice for a client. That may not be the right answer. So you need to think about how you want to drive your organization and the behaviors that people are going to do, and that you really need to include and think about the incentives that underlie that. The next one is really always be motivating, and this goes back to some of that cross-training, but it's realizing that hiring talent is so hard these days that your best bet is to make sure you retain the good talent that you have. And so providing ability for people to stretch what they're doing, possibly taking more ownership, flex time, being able to cross-train, being able to put people out into situations that they're going to help them grow their skill set in their career, because your talent will go somewhere else if they're stagnant, and that can be pretty detrimental to the organization. One of the key ways I hope that you do is, when motivating other people, it's not all about the money, but you can just write a thank you card to say thank you for someone for doing a great job on a project. It's amazing how a handwritten note and a simple, thoughtful gift that someone might love, that person may love Starbucks. Go get them a Starbucks gift card. Maybe what they do on the weekend is they like to sit back and sip a nice glass of wine. So go get them a bottle of wine and write a nice thank you card. But if you really want to retain your talent, it's not about just about bonuses and sharing of profits and whatnot. It's just about spending the time to appreciate that person. So that being said, we talked about a lot of things today. We talked about ultimately, in terms of business operations, the real highest level of things of, are we all aligned? Are we measuring the operations as a whole, so that as we make changes, we can make sure that we're making the right changes in the right direction? It's about setting up the strategies about how do we get visibility, transparency, trust, and ultimately be able to drive an organization that operates like a well-tuned machine, well-oiled machine, and that everybody knows what everybody else is doing, and we're all on the same page and driving towards the same priorities and goals overall. The third one is understanding a bit of the nuances of ultimately how we do the work and how that impacts the structure, in terms of, there's two different realms you can go down, whether you're more vertically oriented, more horizontal. How does the size of my organization impact how it needs to break out hierarchically, and just having a good understanding of that, so you can think about where you're at today if and how you're going to grow, what sort of structure that's going to take you to tomorrow. The next one is understanding the people, the roles that they play, the functions that might be missing, so that you have the whole operations under control and understood. And then lastly, what are some of those key strategies to be able to drive as much efficiency in the organization overall, and be able to make sure that you're maximizing all that you can with the resources that you got. So what I want to do here is I quickly want to go ahead into the poll and launch the poll for everybody. So please select the CPE keyword that I brought up before in the presentation. Is it chimpanzee? Is it gorilla? Is it baboon? Is it orangutan? Is it a monkey? So again, for the CPE credit today, please answer the polling question. The faster you answer, the quicker I can move on. Is it chimpanzee? Is it gorilla? Is it baboon? Is it orangutan? Is it a monkey? So I'm going to close that out here in 5, 4, 3, 2, 1. Thank you so much. So this webinar and other ones that I referenced, as well as a whole host of other webinars, can be found at firminthefuture.com. It's actually getting a pretty good facelift here, ultimately this week or next week. So definitely check it out. There's a slew of content up there. So again, I took a screenshot of there. Definitely check it out. Again, if you like the content here today. Just as a reminder, again, talking about the QuickBooks education overall and the QuickBooks journey. Again, go to QuickBooks QBTrainingEvents.com. You can do everything from Firm of the Future training to fundamentals to CERT to advanced CERT. It's all up there, both live and in person. There's plenty going into probably a city near you or virtual overall. If you're interested in some of the content and topics that I've talked about, you can check it out on the Carbon side. We just launched the next edition. The first one was the generational shift. The next one is on practice growth. Go to carbonhq.com/editions. If you want to learn about Carbon overall, just check us out at events.carbonhq.com. Again, thank you from Intuit. Check out QuickBooks Online. Thank you from the Carbon side. And ultimately, if you have any questions today on the content and so forth, feel free to email me at ian@carbonhq.com. And again, appreciate your time today.